Hi, this is Randy Finney with the right side of the chart, and today is Monday, January 22nd, 2018. Let's take a quick look at the markets. We'll look at gold, silver, the miners, touch on the broad markets real quick, and that should be about it. Maybe a sector or two. Keep this one relatively brief. This is gold. These are gold futures, 60-minute chart, and same chart that I've been sharing lately. Not a whole lot new to report. This was the uptrend line, which we broke down below. You can zoom in, see the breakdown there was pretty impulsive. Hit that first target support level, pretty decent support there around the 1325 level. So far that's held, but the very near-term trend is down. A downtrend is simply defined as prices making a series of lower highs and lower lows. So we'll call it sideways to down. Nothing major until and unless that 1325 level goes with conviction, and then that should bring us down here to that 1309, 1310ish target that I'm looking at. But right now, hard to say with a high degree of confidence. Whether it'll get there or not. Let's just say that there's not I don't have a very strong opinion on gold, but that is where I think we ultimately work our way down to. But whether we go up higher, even make a marginal new high, you can certainly see a, possibility for more divergence right here. You can extend these current negative divergences out if we were to make a new high. So that's something I'll be watching for. And again, I just wanted to give an update, but really I don't have any positions right now in gold. All right. On a related note, we'll look at GDX real quick, or let's just take a look here at this 60-minute chart of GLD for those of you that are trading the ETFs. You can see a nice, bearish rising wedge pattern, very well-defined uptrend line. A lot of reactions on that uptrend line, a breakdown and a little kickback rally so far. So again, this is what keeps me leaning towards that more downside to that 1310 area in gold. And we'll look at GDX real quick here. GDX, there it is, 60-minute chart, divergent high number one, we had a correction, divergent high number two, we've had a correction. We had a backfill of the gap right here. You can see that gap there. We backfilled that gap, and we're moving up today, but again, I don't have a very strong opinion on this one right now at this point in time, as far as the very near-term trend. And here's silver. There's that level I've been watching recently, about 1692. You can see it there. Pretty decent. Not a excellent support shelf, but pretty decent. Quite a few reactions here from below, some reactions there. So we'll call it 1692-ish. Because there's a couple spikes through it, a couple reactions a little bit above it. So again, a level to watch there. And near term, level to watch near term, which would be bullish if taken out. We can look at a downtrend line sort of setting up here off the highs, which forms this descending triangle pattern. So watch for a break of that, either an upside or a downside break. But again, I'm still leaning towards the downside resolution in both gold and silver and the mining stocks as well. Crude oil, the trend has been down now for a few days, a week or so here, and I still expect more downside. In fact, I'm still looking at a pretty significant top in crude, whether we've already put that top in or we push up, make a marginal new high. I think we're looking at a pretty decent correction in crude, and at best, I think it'll be tough sledding on the upside from this point, meaning we could see some sideways consolidation for several weeks, several months. But again, I think the risk reward right now is not very favorable to being long. And so far, we've taken out this trend line here, this minor uptrend line, back tested it, failed, came down, took out this secondary trend line, back tested it, moved down lower, and you can see the potential targets are these levels marked in blue here as well as that black one. So same again, everything that I've covered recently, not a whole lot to report in that. Crude was down earlier, crude futures right now they're basically flat right now. And I do think there's an opportunity in the oil and gas stocks. Here's XLE. This is the big one. There's a lot of energy ETFs out there, but XLE is the Spider Select Energy Sector ETF. 60-minute chart, you can see a nice clean ascending price channel. We can see a breakdown, little kickback rally here. Maybe we'll want to back test it, maybe not. Even if gold pushes, I'm sorry, not gold, XLE. Even if XLE pushes a little higher, it is almost certain to do so on a divergent high. You can see here that the PPO is really lagging, as is the RSI, most of these trend indicators. So at best, you're looking at a marginal new high. So again, it's the same story. I think the upside is limited compared to the downside. You can see my targets here, support levels. Then I think they have any of these, at least these first two, have a good chance of being hit. And ultimately, and it may take a little while, could happen quick, but I think it might take a little while. We work our way down here to probably the 70-ish level. That would be a pretty decent, about a 10% or so correction in XLE. And let's look at a couple of the others. Before we do, let me jump out to the daily chart and just keep an eye on the bigger picture. We had divergences at one point and they were burned through. So let's get rid of that line there. Let's get rid of that line there. And now what we're looking at are extreme overbought conditions. We haven't been this overbought in years, many years in the energy stocks. We have a high level bearish PPO crossover. And what I mean by that, PPO is up here very high. And we had clean separation. I like to see that. And when you get these crossovers, that is those are bearish technical events, bearish PPO crossovers. You can see the PPO line curling down, about to cross the signal line. We had a bearish PPO cross right here where the crosshairs are. You can follow that vertical line up. You can see the correction that ensued afterwards. We had a bearish PPO cross over there. You can see the correction that ensued afterwards. Here was a high level PPO crossover. And again, I put a little more stock in the fact this is a high level bearish PPO crossover. We had a heck of a correction right there. So overbought, bearish PPO crossover pending, coming up near those previous reaction highs. Maybe we hit them, maybe not. Looks like a little flagging action there, but I do not expect, if we pop to the upside, I do not expect this to play out as a bull flag. In other words, if you look at this as the flagpole and this little recent consolidation as a bull flag, normally you'd take the distance of the flagpole, add that on. I just don't see that happening. We are much too overbought. We're looking at like I said, some bearish technicals here. I can make a case for a pullback in crude. So any pop to the upside, even if we take out these previous reaction highs from early 2017, late 2016, I think that will be a failed breakout. So I think the risk reward in energy is skewed to the short side, the downside right now. If you're long those stocks, the trend has been very, extremely resilient. You don't have to take everything out. You can just raise your stops. Don't give back a lot of profits. Trail stops, raise stops, whatever you want to do there. That's XLE. Let's just look at the other ones. Usually get more meat on the bone when you trade these other ETFs. XOP, oil and gas exploration and production ETF. You can see we do have negative divergence there, and we do also have a bearish PPO crossover, which has actually already happened there. So we have the bearish PPO crossover, high level. Last one was right here. You can see what happened if you follow the vertical line up. We had a high level bearish PPO crossover there. You can see what happened. This is technical analysis, and you can second guess this all day long. You can say, no, I don't want to short, the trend's too strong, or I want to stay long. Hey, and maybe I prove wrong, but this is what I see. Just like we had the divergent low here, and this is when I was bullish on these stocks. We were long those stocks. We've come full circle, and I think it's time for a pullback. And at the very least, I think we come back here and visit this 36.93-ish level. Yep, that's a nice support level. And there's an uptrend line here, so that would be my pullback target, minimum pullback target, 36.93, and/or this uptrend line. Looks like 36.93 would come first. So, of course, it depends how long it takes to get there. Swift drop, we could slice through there and hit that uptrend line. And if it takes a while to work our way down, we may hit both or that trend line there. So that's XOP, 60-minute chart. Confirms, bearish, a breakdown, a short entry if you want. I mentioned in the trading room today, crude was trading down slightly at the open. Again, it's flat now, and I'm referring to the futures. There's a nice, clean, bearish rising wedge with a divergent high, negative divergence, everything I like to see. Breakdown, back test. And this has been again, in the very near term, this is what I call a near term or very short term downtrend, a series of lower highs and lower lows. That's the trend right now. Um, so with this kickback rally, it was up, right now as I'm doing the video, XOP is up 1%. I think that's an objective time to add on to a short, initiate a short. Trend indicators down here bearish on the 60-minute time frame. So we'll see what happens. I know, the bid underneath this market is resilient. I'm going to get to the broad markets here in a second, but these are clearly bearish charts to me. So we'll see what happens. I do expect more downside. And last one here is XES. Again, negative divergence, everything I like to see at the highs. This was a nice clean price channel, ascending price channel. We broke down. We're having a little kickback rally here. Trend indicators are bearish. I see XES coming back down to at least that 1726 level. That's about an 8% drop. So I think a lot of opportunity there. XES, as you guys know, earlier in the year, I was bullish on it, pointed out this inverse head and shoulders bottoming pattern, left shoulder, oops, wrong tool. Try to grab this tool here. There's your left shoulder, there's your head, there's your right shoulder. Complex head and shoulders pattern, which means you have two shoulders. I could have done it here as well. You can see there's two left shoulders, and you don't have to have on a complex inverse head and shoulders. You don't have to have two left shoulders, two right shoulders. Sometimes you can have one right shoulder, two left shoulders, etc. And so far, and that's what happened. There was a neckline, there was a breakout. Now this yellow line is what I shared back then as the measured move, which you take the distance from the head to the neckline. So I'm going to give you both sides of this here. If this one plays out, then what we're looking at here potentially, and again, it's not my primary scenario anymore. Back then, I pointed it out, and I think we still may work our way up here, but I think a correction's coming. But if you want to look at the glass half full, the bullish thing here, we look at a bull flag pattern, this being your flagpole. And if you take a bull flag, that's a continuation pattern. If prices break up and out, then your measured target is the distance of the flagpole. So that's a pretty big move, and that could bring us all the way up here to this target I have around 2240 or so. So there it is. If I'm wrong on my call for a pullback or at least some consolidation here, then that's your bullish scenario, and it would just burn through. We do have a bearish cross on the PPO there, a high-level bearish cross. But again, I want to make clear that, and I have for last couple weeks here, that my expectation is for a correction. And you can see again these high-level bearish PPO crossovers and all the corrections that followed in the past. Overbought, that's another reason to not jump on and try to game a breakout of this bull flag pattern. It's just your odds are significantly reduced. There's overbought. This is a 2-year chart, so let's go back and circle every time that XLE has been overbought, or I'm sorry, XES. There it is. So you can see a correction, and these are sizable corrections. Don't keep in mind I use log scaling. And with a log scaling chart, it may not look like much, but if we measure these out, I can tell you they're probably all double digit and then some corrections. So that's it. I see no reason to go long when we're overbought, bearish cross on the PPO. Some of these have divergences, negative divergence. It just puts the odds against you if you're long at this point or thinking about going long. So that's it. There's my take on energy. We'll see how it plays out. Nat gas, I'll touch on this real quick since I've been covering it quite a bit lately. There's your uptrend line. I covered this recently. We had a little intraday break, but a stick save there, came back up. We're flirting with that uptrend line again, so keep an eye on that. We had divergence here at this high right there on nat gas. If we hold here and make another new high, it will most likely be another divergent high. So again, I see at this point limited upside in nat gas, and as of today, I'm just standing aside right now. But I just wanted to update. Those are levels to watch, and if that trend line goes with conviction, you can see some support levels here. In fact, we hit one today. We hit that 317-ish level, hammered off that right there. We also hit this 315.2 level, and if we come down here, there's another level there about 3.054. Okay, and to wrap this up, quick look at the broad markets. Since I've been covering them lately, I'll just follow up. Here's the Dow futures, Dow Jones. Very clean, nice, well-defined uptrend line. We have now have several reactions on that trend line. Negative divergence right here at this high. Markets are in rally mode today, and we're not far from those highs, so we may punch up and make another new high. If we do, it will simply be another divergent high. It'll actually make form this wedge a little better where we're pretty far from the apex of the wedge right here. In fact, it really wasn't even much of a wedging pattern there. But if we do punch up, make a marginal new high, you can see these indicators right here lagging behind, and that will almost certainly be a divergent high if we are rejected there right after the new high. And again, I cannot emphasize this enough. We have absolutely zero sell signals until and unless, and this is what I'm watching, these uptrend lines. So here's the Dow. We hit it again. We're dancing off these trend lines. Let's move on to the S&P 500. Just a nice, clean, rising wedge taking shape here. You can see the negative divergence down below as we push on, made a new high today. Like I said, marginal new high, and that divergence is still very much intact down here, very much in place. It's not confirmed. We need to see the MACD and the PPO turn around, make a bearish cross, turn back down, and that can happen anytime. And from the look of this move, when I zoom out to a daily chart, we are going parabolic, and we haven't gone parabolic in since I can recall throughout this bull market. We're starting to move up parabolically on the daily time frame, and that is indicative of a blow off top, at least a near term blow off top. It doesn't have to be the blow off top for the market, but for the near term, for this rally that's taken place since the first of the year. So there it is. And again, as I pointed out, these corrections work. The uptrend is strong. Sure, they're not very big corrections there. You can game them for a quick pullback, but when you look at where we are now, and keep in mind the way these momentum indicators work, as the name implies, they're momentum indicators. And when you see this divergence, it means the market is losing momentum. Yes, it's moving up. That doesn't mean we've reversed, but you can see prices are now hugging this trend line. Before we'd have these big bounces every time we came near here, and now that momentum is waning. Point being, if these divergences play out now for even a very small correction, what it's going to do is take us down below this uptrend line. This is again, like I said on the Dow a minute ago, these are the uptrend lines we need to watch. And so therefore, it won't take much. Any breakdown below that trend line will trigger a pretty significant sell signal. And there's your support levels below. I think at bare minimum we come down here at about 27.91, and I can easily see us work our way down. Even if we get a kickback rally back test, I think ultimately we come down here at about 27.36. Now let's look at the NASDAQ and we'll wrap it up. This is the NDX NASDAQ 100, 60-minute chart again. Here's your uptrend line to watch, this blue uptrend line. We're dancing on it. We've been dancing on that trend line since really the beginning of the year. So all these 60-minute charts I'm covering now are really what we call, or I'll call the New Year rally. And so far, just like I don't have them all marked here, but just like on the S&P a minute ago, you see little divergent highs along the way, which led to little corrections. But now we have just a series of these consecutive divergent highs that have been building. So it's one large divergent high, and these lines have to keep being drawn. If we push up, make newer highs, we have to redraw these uptrend lines. But until and unless these indicators take out those previous highs back here, that's negative divergence. And again, and until unless they break down, especially with this strong uptrend, until and unless we break below these trend lines, and you'll want to see it on either a 60-minute closing basis or an impulsive break below, we don't have any sell signals. But when we do, get ready, because this has been a powerful run, and typically once the momentum players exit, once the momentum breaks, once these trend lines break, I should say, I think it'll be a pretty swift move down. There's my first target down there, about 27.43. Second target, 67.05. I think those will be hit in relatively short order as you see, a rush for the exit. A lot of people taking profits, short side traders piling in to game that quick pullback. So there it is. Set price alerts. Keep an eye on them. And until then, trade it as you like. There's not a lot of, there's not really any objective reasons. I don't see any chart patterns, continuation patterns, any reason to get long. This is just a uptrend with a lot of momentum. And again, if you're long, trail your stops, raise your stops, or you could set a stop just below these trend lines. And if you're an active nimble trader, you can certainly establish a short position as soon as you get a break of these. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.